A slew of positive business updates leads to some optimism, but the market breadth remains negative. Financials and healthcare lead gains, while metals and consumer durables drag. Fortis Healthcare gets a thumbs up from the SEBI for a long-stymied open offer by parent IHH, while another boost for all government empaneled hospitals comes in from an upward revision in the central government health services rates after 14 long years. Tata Capital's 15,500 crore rupee IPO opens following a strong response from anchor investors. CEO Rajiv Sabharwal expects third and fourth quarters to be bumper quarters. The company sees margins improving as costs dip with digitization and AI deployment. Business updates by top banks and NBFCs point to a strong credit growth in the second quarter, with lenders like PNB indicating optimism in corporate credit growth going forward. Small finance banks also see recoveries in microcredit rise. Gold skates to a new high, above $3,900 per ounce, even as the US shutdown adds fuel to the rally. Bitcoin tops $1,25,000 for the first time, even as ETF inflows surge. Even silver scales to a new high in India and nears its record mark globally. It's all guns blazing. It is a green screen that you're watching here on Halftime Report. I'm Mangalam Malu, and with me, Vinny Motiwala. We come to you live from the CNBC-TV18 Motilal Oswal studio. Looking good for the markets. When we say a green screen, and I'm not referring just to Vinny's jacket, but, you know, all in all the frontline indices, the Nifty around that 25,000 mark. An important milestone has crossed the 100 and the 20-day moving average, led by both its engines, the Nifty IT index as well as the Nifty banks. Mid-caps, what are they doing? The index is up around 1/3%, with more stocks advancing than the number of stocks that are declining. All this actually led by a good slew of updates coming in from the second quarter as we move towards the festive and the result season. So it looks a lot more comfortable than the uncertainty that we had in the past couple of weeks. Despite that, we saw a 1% gain in the last week. So let's see what this brings and the next few weeks bring for us. Hi, Vinny. Good afternoon.
Hi, Mangalam. Good afternoon. So obviously, it'll be interesting to see this 25,000 is going to be key, right, if we move forward from here on. But today, obviously, like you said, green screen that's coming in, and a lot of leaders today coming in from the hospital side, a lot of movers because of their Q2 updates as well, whether the positive side or the negative side. We're seeing a lot of moves because of the Q2 updates. Earnings season is just around the corner. We're waiting out for details coming in here. But an important update I want to highlight coming in for the hospital sector, and one specific company there is Fortis Healthcare. Let's keep an eye out on that. Now, the SEBI has granted an approval to IHH Healthcare to proceed with that mandatory takeover offer of 26% stake in Fortis Healthcare and Malhar Hospital. This is following a 7-year delay. That was the major part, right? The 7-year delay that came in. Now, because of that, obviously, the rate at which the open offer was going to be taking place was different from what the current price of Fortis Healthcare is. Today, also look at it. Fortis Healthcare is holding on to gains of 6%. And this case was going on for a while, so much of a delay that we're seeing coming in here. Now, to talk to us more on this, what does this mean? Could there be furthermore any situations that could come in, or furthermore, one could go to the Supreme Court and say that, no, we still want to hold this. How does this work? What is the further outlook going forward from here on is what we're going to be understanding today. And to discuss that, we have Hetal Dalal, President and CEO of Institutional Investor Advisor Services, as well as Sriram Subramanian, Founder and MD at Engovern. Hetal, as well as Mr. Subramanian, good afternoon. Thank you so much for joining us on the show. Hetal, let me start with you. This is such a big update that's come in, but there was a significant delay, 7-year delay. The price at which they wanted to go for the open offer was 170. Now today at 1,000. How does this merit in terms of clarity of pricing? Is there possibility that they could apply for new pricing? How does this go about? Or is there further legal recourse which could take place, which could lead to a further delay?
So good afternoon, everyone, and thank you for having me on the show. It is indeed unfortunate that it's taken 7 years for IHH to have to complete the open offer. And it's certainly costing them a lot more than it did at the time that they actually envisaged the transaction. In fact, I would argue that they are now paying for the value that they themselves have created in cleaning up the entire act and trying to get Fortis up and running, given the condition that the company was in at the time of this particular transaction taking place. I don't know, honestly, even if they do get a sort of exception and say that they're going to go back to that price, if the open offer will be successful, because today shareholders will tender only when the price is right. Given that they currently own about 31% of the equity, going to above 50% will certainly be their goal. And therefore, I think while it is indeed unfortunate in terms of the price movement for IHH specifically, they've been very focused on getting that controlling interest in Fortis. And to that extent, it's also good for Fortis that there is this whole overhang which has now gone away. Once the open offer closes, IHH is very specifically in control with a more than 50% shareholding. And therefore, from the perspective of the company itself, I think this is a good sort of development.
But what a lost opportunity for IHH, right? Because, I mean, they wanted a lot more of the stake of the company. And because of, like you said, the value that they have themselves created, they're forced to pay a lot more for that or offer a lot more for that. And they're not sure of getting, tendered in at a higher price as well, even if there is an exception. But let's ask Sriram. Sriram, because of the kind of, interest that there is from the PEs, etc., in the hospital space right now in India, and after the kind of value creation that we've seen for whatever little stake that IHH had, do you think that they can go ahead and sell it to some of the PEs given the sort of interest, instead of taking more stake right now with an open offer and all of that, just exit the 30% that they have? Or do you think it will be prudent for them to continue to hold on?
Good afternoon. I would think the hospital sector in India and the healthcare sector is still a long way to go in India. If you see the coverage in tier 2, tier 3 towns, even in tier 1 town, cities, etc., the coverage of corporate hospitals is still, the market share is 30-40% only. So I would think there's a long way. The India healthcare opportunity is very big. So I would think IHH, being a strategic investor, will continue to stick there. I don't think they will want to sell to any financial investor or so. And coming back, our choice of words is also very important. See, it is not that IHH, this is a mandatory open offer. So even 7 years ago, it was a mandatory open offer. So one doesn't even know, even at that time, whether shareholders would have tendered to the 170 rupees. Even to this day, it is a mandatory open offer. SEBI, because it is not the fault of the company that it had been dragged to court and the SEBI had put the approval on hold. So from that perspective, it will launch a mandatory open offer at 170 rupees. It's not, obviously no shareholder is going to tender now that the stock price has run up beyond 1,000. So I think IHH will just continue to hold its 31% shareholding, and it is in control of the business. There is no compulsion to sell off. The growth rates and the future for healthcare in India is positive. So it will be status quo from that perspective.
Right. So Hital, what happens now? It was a mandatory open offer. It just becomes a legal formality now. How does it change things for the business of the company? I mean, it's been doing well so far, no problems, and now added benefits coming in from the hospital, for the regulators, also for the hospital space. Do you think this becomes a non-issue now and it's business as usual?
I think it's been business as usual for a while. I think the only thing that really changes is that because the company was under this continuous open offer for almost 7 years, they had to come to shareholders for approval for every small sort of transaction they want to undertake. I think that the compliance and burden sort of goes away now once the open offer gets completed, and therefore it sort of reduces to that extent, some of the shareholder approvals that the company will need to seek. But that's more sort of operational issue and a compliance sort of cost issue. I think business has been good. The company is under IHH control. The question is, will they move to a 50% equity or not, which gives them dominant control? And that gets driven, as Sriram rightly says, by the current price and whether they want to up their investments and actually pay for what they've been able to create. It's not a non-issue. I wouldn't say it's a non-issue per se. I think that open offer will help them increase equity, and that's always helpful. And I think to that extent, we'll have to wait and watch in terms of what the price is. See, today the price has not been announced by IHH. Now, ICDR pricing will of course apply, and therefore it will be close to market price unless they get an exception. But if they're really intent on increasing their equity, they will have to give a price which is going to be attractive to shareholders, and that's going to be interesting to see.
Absolutely. A price that is going to be attractive to shareholders will be key, right? Because then that will be a deciding factor as well. Mr. Subramanian, from an institutional investor point of view, if I'm looking at it, what does it mean for them? Because there will be large shareholders there. How should they be viewing this scenario? And, in terms of any pressing or, information that they should furthermore focus on, given that there could be a revaluation in terms of prices, how should they look at it?
No, as Hetal said, only this open offer overhang is gone. So it's a positive for the company, and institutional investor, however they would have viewed it before October 1st, is how they will view it now. I mean, healthcare sector is booming. In fact, the free float of the company, because IHH owns only 31%, means that there is 69% free float. So from that perspective, it is fairly amenable for institutional investors to build up huge equity and sell off whenever they want to, etc. There is a lot more liquidity out there. So from that perspective, it's a very positive for the company.
All right, hold on to your thoughts, Hetal and Sriram. We'll just come back to you in a moment. Meanwhile, important updates at the bottom of your screen. This is with regards to the AGR case for Vodafone Idea, which was then in the Supreme Court. What we get from our colleague Ashmit is that the hearing has been adjourned and postponed to August 13th, or rather will happen on the August 13th right now.
August 13th?
October 13th. Yeah. I apologize. October 13th, as the government has sought more time. It was deferred the earlier time as well, brought to October 6th, and now moves on to October 13th as the government has sought more time, and which is why we're seeing the stock come off once again from the highs of trade. Remember, this morning there was a news coming in from Bloomberg that the government was perhaps mulling a one-time settlement to improve ties with the UK. On the back of that, there was a spike from the lows on the counter. But then again, the fact that there has been a deferral in this case itself all the way up to the next week is something that, has the street a little less more aligned on any direction. And some of those longs are currently coming off. We'll get Ashmit for more details on this one. But for now, what we have is that there has been a deferral and the stock is off the highs. Let's get back to our conversation. Sriram, the other big positive that has happened is that the regulators, the government has actually gone ahead and revised rates for, the hospitals that the governments would be clients for after 14 years. How big a positive do you think this is for the space, and which ones would you believe would benefit? Because while government is decent enough business for some of the hospitals, the question is, there's also a lot of working capital that goes because there are low margins or maybe payment delays.
Yeah, obviously this is a big issue, even with the Ayushman Bharat kind of a scheme where hospitals have a lot of receivables from government. So the private hospital chains which are listed are largely defocusing on the government as this one, though it's a regulatory mandate, only they deal with cases that come to them. They don't go in search of those cases. So from that perspective, I think it's neutral for all the listed, though many stocks have run up, including Max, Fortis, etc. Fortis probably because of this open offer approval, but other, as you show on your screen, Max, Narayana, all stocks have run up 3-4% today, but Aster, DM, etc. But I think it's a neutral from a perspective of government, I would say revenues and focus, etc. Those are not revenue and margin drivers for the hospital chains.
Absolutely, interesting take there. So Hetal as well as Mr. Subramanian, thank you so much for joining us this afternoon, explaining us about Fortis, what it means in terms of pricing, what we're keeping an eye out on. So thank you so much for that. But with that, we're actually going to slip into a very short break, viewers. Remember, you can tune into the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impacts on Indian businesses, giving you unparalleled insights. Tune into CNBC-TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Welcome back to Halftime Report on CNBC-TV18, where we ended. That's what we'll start with, right? The hospital space and the healthcare space, where the government has announced the long-awaited revision of the CGHS rates, now updating prices of nearly 2,000 medical procedures. This will be the first major overhaul in over a decade. We have BS Ajay Kumar, Executive Chairman at Healthcare Global Enterprises, joining in with us to talk to us about what this means for Healthcare Global company itself. What does it mean for the sector as well? Thank you so much, sir, for joining us this afternoon. Let's just start by talking about one in terms of the revenue exposure y'all have from these CGHS schemes or the PSU schemes that you talk about, and what would be the uptick in terms of revenue now that we could see if this actually once this goes through?
First of all, a small correction. I am only a chairman now. I'm not executive chairman.
Got it.
And the second thing is, yes, I think it is a step in the right direction. And definitely, particularly in a field like cancer, I think the cancer patients who are under CGHS will definitely benefit. But we are still looking at the details of this. What will be the impact of this? I'm sure it will be positive, but what kind of a positive impact we'll have, we'll only know when we look at the details. For example, oncology is very complicated. We have to look at chemotherapy rates, drugs. We have to look at radiation and what is the reimbursement for surgery, which has been the key point in the past. Surgical reimbursement has always been less. Are they going to make it up? Because oncology has changed dynamically. And by making these changes, what they are doing, I'm hoping CGHS patients will get the right treatment at the right time, and they will not have to pay cash out of pocket. And that is the whole idea. And I will take it even one step further. If this works out, I hope even other organizations like ESI, ECHS, everybody will follow the trend to see how to make sure, somewhat of a uniformity will come in cancer care to all sections of the society. That is what we are looking at. Even state schemes should follow this, which will tremendously benefit the cancer patients in the country. And it will make us come towards more of an advanced country.
Sir, could you just help me with a number for Healthcare Global? What's the exposure from these CGHS schemes in terms of revenue?
I have to look into that. I'm not sure exact numbers.
Okay.
I can let you know on that. But it won't be. It depends on each cities and where we are CGHS. So it varies from city to city.
If you could give us just a broad number and not an exact number, because we have some of them. For Fortis, for instance, it's 4%. Yeah. Apollo, it's about 9%.
Also, again, don't hold me to that. It may be in the region of 5 to 6%.
Got it. We won't hold you to that, but 5 to 6%. And what exactly is the difference in average revenue per occupied bed for CGHS versus the others?
I don't know the numbers. I can really supply you that one. Say no.
No, but I mean, the reason why we ask is because while it may be 5 to 6% of your business, 5 to 6% of your business will have at least a revision of, 8 to 10% basis all the things that you're operating upon. So that's a decent uptick on the similar cost base, right? So that may be slightly margin accretive. So from an investor standpoint, that's what we're trying to understand, even though the goal is there should be affordable cancer care, timely cancer care, and good cure for everyone who is, God forbid, detected or contracted with this disease. So we understand the human aspect of it, but from a listed company standpoint, I'm sure this could ease some problems on the operational front.
We will have to ask our management to do some homework and come back on what will be the real impact, because the news is so new. So we need some time, but certainly it will be positive. And to what extent is, as we always say, the devil is in the details. We have to look at what are the verticals under oncology are going to be paid more, and based on that, we can let you know once we do our homework.
Okay. Sir, one more point. While there are some concerns that have also come in the past is, the receivables from the scheme also, right? There were certain concerns that there were delays. How much is your amount that is currently due from this CGHS scheme? Any indication on that front? And are there a lot of delays there that you see normally in terms for the company receiving the money?
I think it is not from my knowledge I have of the past, it is not a huge amount, but there is definitely a delay. Average delay may be close to 6 months, but that was in the past. I certainly don't know the recent part of it, whether they have improved, but I can let you know once we do our homework what will be the difference.
I'd request you to, once the exercise of understanding this impact is complete, you also upload that presentation on the exchanges so that will benefit the larger set of the audience. If not, you can join us once again here and give us those numbers.
I will certainly ask our CEO Manish to do some work on that, and maybe he can be on your TV to explain in detail.
Definitely, makes sense. But if you could also give us, an understanding of, barring CGHS, are there any other PSU schemes that you have exposure to? How much would
we have exposure in some sections to ESI.
Okay.
We do have exposure in some ECHS, and of course the big exposure in because we are in the tier 2, tier 3 cities to the local schemes, state schemes under Ayushman Bharat scheme.
Right.
So that there is an exposure, but our overall exposure comes in the region of about 20-25%.
All right, 20-25%, of which 5 to 6% is CGHS. The rest would be all the other schemes. So now the question is, now that there has been a revision in CGHS, do you believe this makes a case for you to appeal to all the other authorities for a price revision as well?
Yeah, that is what I said in my opening remark. I hope they follow the trend. And because, honestly speaking, the cancer care in India, the reimbursement is terrible, to put it very mildly.
Right.
And because of that, patients suffer a lot. Oncology hospitals have to, do cross-subsidy. So many things we have to do because of these issues, where they pay very nominal amount, particularly the Ayushman schemes, the ESI schemes is the worst of all. I hope they follow this trend and understand why CGHS is doing, and CGHS could become a trend setter to help us to bridge this gap.
Absolutely. So, analysts are projecting, according to their analysis, is that 2.5% incremental revenue is what, maybe some companies could see coming in from here. Improvement in terms of EBITDA growth as well. One, do you think this is a fair estimate? And also, from when will we start seeing these synergies? Will it be second half of FY26? Or does these benefits for the industry or the hospital sector start coming in from the first half of FY27?
I think if they are going to do that from 13th of October, what they have announced, I think whether they are going to do for old patients who are on the scheme already is issue which has to be sorted out with them. Assuming it even applies to patients who are already on treatment, and then we start the new patients on this particular reimbursement scheme, we should start seeing some benefit definitely in the fourth quarter.
All right, some benefit definitely in the fourth quarter. We request you to, join us once again, or the concerned authorities to join us once again and give us a detailed outlook on how this would, benefit a player like you, and more importantly, all the others in the hospitality or the hospital space as well. We'll take a short break, come back. On the other side, we'll talk about a lot of stocks which are buzzing around. Vivek joins in with that list. Stay with us. Welcome back. Seems like the Nifty is stuck to the 25,000 mark, and it's an important level to track as well from an index standpoint, largely because one, psychologically important. Secondly, we have a lot of calls written at those levels as well. So will those call writers start to feel jittery if the Nifty sustains above that or not? Something that we'll be tracking, but no such problems for the IT index. In fact, the IT index has been zooming right from the word go and currently at the high point of trade and supporting the frontline index. The Nifty Bank as well has moved to the high point of trade, closer to that 56,100 mark, and in doing so has crossed important levels as well. But in the last few minutes or so, we've seen some traction come by in Paytm. So 197 Communications, the intraday chart comes up for you. It's up 4% right now, and in fact, it's done well this October so far with an 8% up move. The other one that's doing well is Siemens. Siemens is now up around 2% as well. Remember, the stock had been a bit of an underperformer. Now that's the one that has come up and it's moved to the higher end of today's trading range. The other one that's also picking some pace is Dixon Tech, which has moved higher by about 1.5%, but most of the gains have come by in just the last 15 odd minutes. Shriram Finance is the other one from the frontline end of things, which has now taken the top honors as the biggest gainer on the Nifty, up nearly 4.5%, and a big up move is what we've seen on that. What we'll do is take a short break. On the other side, we talk about all things commodities as Manisha Gupta joins in. With her is Amit Goyal of Pace 360. All of this, even as some of the commodity prices near record highs.
Welcome back, and joining us now is Amit Goyal. He's co-founder and chief global strategist at Pace 360. Amit, hi, good to have you. And the story about all-time highs in gold just about continues. I think in this year, until now, we've done almost 39 and 15, perhaps 58 times that gold has seen an all-time high. From where we stand, are you cautious buyer? I'm assuming nobody is selling at these levels even now.
Hi, Manisha. Thank you so much for having me on. So I'm a bit of a party pooper right now, Manisha, and I think it's the wildest party that we've seen in precious metals in a very long time. And we, being students of history and economics, I can safely tell you that in the last 40 years, there have been only two such episodes where gold and silver did extremely well, and dollar index was either soft or going down. And in both those instances, gold and silver corrected a lot after that. As I mentioned to you last time when I was on your channel, that this is a reflationary boom. That was about 2.5 weeks back, and I would want to say that it's not even looking like a reflationary boom now. It's looking like a reflationary bubble, and particularly accentuated in gold and silver. I have been trading precious metals now for about 25 years, and this kind of price action has very few precedents.
Really?
So it would be almost impossible for anybody to put a finger and say that, okay, this is going to be the precise top, because this is now a bubble of gigantic proportions. To say what the exact top is going to be and how many days it's going to be made. But I can safely tell you that whatever top is going to be made, there is going to be a very, very deep and correction, and there is going to be almost like a regime change over the next 1 year after that.
I get you, Amit. People have been calling it a pause, a sell for a very long time, but gold and silver clearly not listening to that. Also, I have been talking to some banks, Amit, and they tell me that there are liquidity concerns right now as well coming in, because there is one delay in delivery. There is also shortage in immediate buying, rather selling or availability of gold and silver, as it were, in various markets there. China has been buying very strongly as well. So clearly, as you said, it's not history or even economics that we are dealing with right now. This is quite a bit of a panic buying and a bubble territory that we're looking at. But even if we do that 4,000 and 4,200 on charts, and you're talking about a good amount of profit-taking correction into the markets, where do you see prices coming in then? Because this bull rally started from 2,100. We are almost at 4,000 right now. Where is that correction lasting until?
I think, Manisha, firstly, I do agree with you that normally in this kind of a rally, you would want to see them making some landmarks. And for gold, obviously, $4,000 is going to be a landmark. And for silver, crossing $50 for the first time ever is going to be a landmark. And I would want to believe that there is a high probability that both those landmarks are going to be achieved within the next few days or maybe a couple of weeks from now. And post that, I think it's going to be just like you're seeing brute force in the market right now, from buying practically from all quarters, there is going to be a brute force on the selling side as well, which is what history tells us. And in which case, you can expect a 30-35% correction in gold. I would want to mention that it happened in 2007-8 when gold went down by about 34-35% in 6 months, post that inflationary bubble in precious metals and commodities. And the other one was 2011, where it went down by 45%, and that took a much longer time. That took almost slightly more than 4 years. I don't think it's going to be 6 months. I don't think it's going to be 4 years. I think it's probably going to be about a year or so.
Okay.
And the amount of correction which I expect is about 35% in gold and about nothing less than 50% in silver.
I missed that. 35% in gold and how much in silver?
50% in silver from the top, Manisha, because that is where right now the biggest madness lies. It has even crossed gold in terms of the recent madness and frenzied.
What I want to know, Amit, is that after we've done this 35% and 50% of correction in silver, are those levels going to be good to buy, and for how long a period?
Manisha, I'm absolutely convinced that in case of gold, those levels are going to be a great buying opportunity. It's just that a regime change has to happen. And if I were to assume a $4,000 top on gold, and if I were to assume a 35% correction, so that would mean that we would go down to the to a territory of 2,700 on gold, which is like so far-fetched at this point. But I think it is plausible, and at that level, gold is going to be the best investment in the world again. And silver, I think 50% fall I am seeing from the top, and I'm not even sure whether silver is going to be a great long-term buy after that, because I'm seeing a very deep recession in the world led by US over the next 2 to 3 years. And in which case, the demand for silver for the first time in a decade is actually going to go down. And I know people are going to tell us that it's going to be, photovoltaic cells, electronics, semiconductors, electric vehicles. You need silver everywhere. But believe you, Manisha, we've seen periods of time when the demand for silver actually went down when there was a economic contraction. And this looks like a pretty sinister economic contraction ahead, in which case silver is not going to be a long-term buy, even at those levels. But yeah, of course, there are going to be some frenzied rallies up and down both ways. So we are going to be playing those rallies, but there isn't going to be a long-term buy between them. It's going to be gold. And I would still bet on a 30 to 35% correction from the top.
Got that.
Okay. Amit, as well as Manisha, thank you so much for joining in with us on this conversation on understanding gold as well as silver. I'm waiting for that correction if it does happen.
All of us are.
If it does happen, yes, gold and silver, we'll keep an eye out on that and that buying opportunity if that is there. But thank you so much for that conversation there. On that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll get more on the markets and focus on defense stocks as government has opened defense production for private sector. Stay tuned in for that. Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty is trading almost at the day's highest point, 25,000, about that mark. 0.5% of gain for the Nifty 50 today. But let's move on, and sources tell CNBC-TV18 that Defence Ministry has opened up missile and shell production to private sector. Ria is here to give us more details on this one. Ria, what is the latest update we are picking up here? What will this mean for the defence companies?
Well, yes, Vinny, sources have indicated to us that the Defense Ministry has opened up the production of missiles and ammunition to the private sector. Now, an amendment has been made to the Revenue Procurement Manual, and this eliminates the previous requirement for private entities that are intending to manufacture bombs or ammunition to secure an NOC from Munitions India Limited. And this essentially clears a long-standing bureaucratic hurdle for private companies, which are now permitted to manufacture artillery shells in calibers of 105, 130 and 150 mm. They are also now permitted to manufacture the Pinaka multi-barrel rocket launcher systems, as well as 1,000-pound general purpose bombs, mortar bombs, as well as hand grenades, and this also includes medium and small caliber ammunition. Now, what will be the impact of this move? Firstly, this streamlines operations and it also speeds up approval processes, and in fact it will also reduce the dependence of Indian companies on PSUs as well as on foreign imports. And in fact, this also opens up export opportunities, especially in Europe, which is currently facing an ammunition shortage, and the current TNT production for Europe is currently dependent on a single manufacturing facility in Poland. Now, largely this removes a key entry barrier for private defense firms, which can now set up ammunition production units independently. This move is expected to be positive for private companies, the likes of PTC Industries, Premier Explosives, Solar Industries, as well as Astra Micro. And although this can take away some market share from firms like Bharat Dynamics as well as Bharat Electronics, which currently produce all of the missiles in India, but this impact is only expected to come in 2 to 3 years down the line.
If we take that point, higher production opportunities for some of the companies, maybe some bit of market share losses, but that's 2 to 3 years away from now. The street, celebrating it today. Just keep an eye out on the markets. 25,025 for the Nifty and gaining. More on the markets after this short break.
Welcome back to Halftime Report on CNBC-TV18. We're seeing that the markets have inched up a bit further. 25,030 is what the Nifty is trading at. Nifty IT managing to hold on to gains of more than 1.5%. Mid and small cap is also seeing a good performance. Nifty mid cap 0.7% of uptake, while small cap is also managing to hold on to good gains in today's trading session. So far, no complaining in terms of move that is coming in for the markets. Nifty 50 at least has inched up to the day's highest point. But with that, we're actually out of time on this edition of Halftime Report. Don't go anywhere. Up next is Business Touch. Take all the market action forward.